Hello, all my dear students of CA Final Full English. I hope you all are doing good. I hope your studies are going on great for your upcoming exams. So today we are going to do a very important compilation of all the PGBP adjustments along with other heads of income, along with Chapter 6A, along with new regime, old regime. So we are going to make a master question of PGBP which can come in the examination. As we all know that the very first question in the examination is going to be on total income computation only. Along with that, sometime tax liability and tax payable also. So what all adjustments can come in that? Majorly it will be a PGBP dominated question, but yes, the other heads can also be important. The regimes can also be important. The chapter 6A can also be important. So we are going to talk about all of them today in this particular video in around 118 adjustments in around 45 minutes. You cannot imagine that in 45 minutes I am going to cover 118 adjustments which are relevant for question number 1. If you watch this again and again, I don't think so anything beyond this can be asked in the examination. Yes, one or two new adjustments can always come in the examination which you have to apply your mind and try to get it correct. So without wasting any further time, let's start with the very first adjustment over here. Very first adjustment over here is the creditor is waiving of your amount. If the creditor is waiving of your amount, it is deemed income under section 41(1). Therefore, it should be chargeable to PGBP. So if it is already credited to PNL, then ignore. If it is not credited to PNL, then add back and write that it is deemed income. Okay. Next one, employer contribution to provident fund, etc. Always remember, if you want deduction of employer contribution, you have to make the payment by due date of filing of return. Up to the due date of filing of return, you can make the payment as per 43B. But employees contribution are always considered first as an income of the assessee, income of the employer, and then if you want deduction of that, you have to make the payment by 15th of the following month. So here you don't have the time till due date of filing of return. In employees contribution, you have to make the payment by 15th of the following month. If you don't make the payment by 15th of the following month, then the expenditure will be disallowed in your hand. Okay. Next one, always check all the TDS implications in the examination. If you are making payment to resident, then 30% will be disallowed. If you are making payment to non-resident, then 100% will be disallowed. Sir, when it will be disallowed? If you don't deduct by 31st of March, or if you don't pay till the due date of filing of return. You have to deduct by 31st of March itself, and you have to pay till the due date of filing of return. If you don't do any of them, then 30% or 100% expenditure will be disallowed. Along with that, always see one more thing, that when you make payment to non-resident, then you also check whether the income of the non-resident is chargeable to tax in India or not. It is accrued in India or not. It is taxable in India or not. Then only there is a question of TDS. Otherwise, the question of TDS does not arise. If you are making payment to a non-resident and the non-resident is not subject to tax in India, there is no need to deduct TDS. In that case, the expenditure will be fully allowed to you. Okay. Next one, if you are doing some periodic wage revision in your company, in every 3 years you make some wage revision in your company, and for that purpose you make a provision that will be allowed under the income tax law. Next one, very important, if you take a loan for a fixed asset, but unfortunately the fixed asset is not put to use, then what will you do? That interest will not be allowed as a PGBP expense. You have to add that interest to the asset till the time the asset is not put to use. Till the time the asset is not put to use, capitalize the interest and then claim normal depreciation and additional depreciation if the assessee is a manufacturer or power generator. But remember, additional depreciation is not allowed in new regime 115B, AA, BAB, BAC, BAD, BAE. Additional depreciation will not be allowed there under the new regime. Also check if the asset is used for less than 180 days or more than 180 days. Accordingly, claim full depreciation or half depreciation. Okay. I hope it is clear to all of you. Next adjustment is also a very famous adjustment, 80JJAA. 80JJAA is for what? It is for giving employment to employees. So what are you supposed to check in that to claim 80JJAA? Again, I am saying 80JJAA is very important section because it is allowed in new regime also. It is allowed in old regime also. It is allowed in 115B, AA, BAB, BAC, BAD, BAE also. And it is allowed in normal regime also. Now to claim 80JJAA, what are you supposed to do? You need to hire new employees first of all. Okay. Secondly, the emolument of the employee should be up to 25,000. Check that whether it is up to 25,000 or not. Thirdly, you have to check whether the employees are participating in the recognized provident fund or not. Fourth, you have to check the employees are employed for 240 days or not. Fifth, the employees, the company, the entity, the employer is subject to tax audit or not. You have to check all these conditions. Which all conditions? New employees, emolument should be up to 25,000. They should participate in recognized provident fund. The employment should be up to 240 days and tax audit should be done by the company. All these conditions are fulfilled. You can claim 80JJAA, 30% deduction you can claim 80JJAA. But one special case is there. If you are a manufacturer, leather, apparel and footwear, then 150 days is also sufficient to claim deduction. Okay. Generally, 240 days employment is relevant, but for leather, apparel and footwear, 150 days is also sufficient. One more thing, you have to make the payment by 4 modes. If you don't make the payment by 4 modes, then the deduction will not be allowed. Plus, if you make the payment of more than 10,000 in cash, then 80 JJAA will be gone. Along with that, you have to also disallow the expenditure under 40A3 in PGBP also. Because in PGBP also, you cannot give salary of more than 10,000 in cash or any expense of more than 10,000 in cash to a person in a day. I hope it is clear to all of you. You are purchasing one-time license or any intangible asset and you are debiting to P&L, add back. It is not an expense. It is an intangible asset. Therefore, add back and claim 25% depreciation if the asset is used for more than 180 days. Next, you are making payment of cash to road transporter 35,000. Yes, generally you cannot make payment of more than 10,000 in cash, but to road transporter you can make the payment up to 35,000. Next is a very important adjustment. Municipal tax on house property. Now listen carefully. When you let out a house property, you reduce lot of expenses like municipal tax paid, like standard deduction, like interest. Remember, it is allowed under normal regime. It is also allowed under 115BAA. All deductions are allowed under normal as well as in 115BAA. But in 115BAB, remember, all these deductions will not be allowed. No deductions will be allowed against the income under 115BAB. 115BAB will be subject to 22% tax. No deductions will be allowed there under 115BAB for normal tax rate. For whichever income there is no special tax rate, if there is a normal tax rate like HP income, dividend income, directly rental income will be subject to 22% tax. Directly dividend income will be subject to 22% tax. Yes, in normal and 115BAA you can claim what? You can claim the deduction of municipal tax also, standard deduction also, interest also. Next one, you are giving donation to certain scientific research association like 3512, 12A, 13. 2AA not allowed in new regime, allowed only in old regime. It is allowed in the old regime, not allowed in the new regime. Okay. Next one. Predecessor has sold some goods and the goods have become bad debts in the hands of the debtor, has become bad debts in the hands of successor. Whether it will be allowed as deduction? The answer is yes. Predecessor means amalgamating company has sold the goods has become bad debts, the debtor has become bad debts in the hands of amalgamated company. It will be allowed as deduction as per the Supreme Court judgment of Veerabhadra Rao, K. Koteshwara Rao. Next, old fixed assets you have discarded, but money is not payable. If old fixed assets you are discarding, which is a depreciable asset on which the money is not payable, nothing should be there. If you want to reduce the fixed asset from block of asset, there has to be some money payable in the form of sale, salvage, insurance, scrap. If there is no money payable, no effect, nothing should be done. Let it be like this only. Okay, nothing to reduce, don't reduce anything, no effect will be there in your entire question. Next, there is a conversion of firm into a company or a conversion of proprietary into a company which is exempt under section 47(13). Now, there is one condition in that for exemption, that all the partners of the firm should continue to be the shareholder of the company, and they should hold at least 50% of the total shareholding of the company for a period of 5 years. Okay. Otherwise, if they sell the shares and it goes below 50%, then the company has to bear two consequences. So one of the condition is they should hold the share for a period of 5 years, 50% or more. If it goes below 50%, then the company has to bear two things. First, the capital gains which got exempted earlier will become taxable now. The capital gains which got exempted earlier under section 47(13), 47(14) will get taxable now. Secondly, the brought forward losses from firm to the company. The firm can transfer the losses to the company now. The firm can transfer UAD also to the company. Which losses? Section 72 losses can be transferred to the company. That losses also cannot be set off by the company. I hope it is clear to all of you. Now, next, the landlord has forfeited my security deposit. If the landlord has forfeited your security deposit, it is a capital expense. It is not allowed as a deduction. Next one. If a capital expense is done on the landlord premise, I have taken a premise on rent. On that, I have done revenue repair. I can get deduction under section 30. But if I have done capital repair, then I cannot get deduction under section 30. Then I have to take depreciation under section 32. I can claim that as a deemed building and claim depreciation. Always remember, if you take a premise on rent from someone, on that, if you are doing capital expenditure, that is not allowed under section 30. It will be considered as a deemed building on which you can claim depreciation. Okay. Next one, you are giving some standard warranty on sale to the customer. On defect, you are replacing the product. So suppose you are selling 100 products and you have a perception that from the past experience, out of 100 products, 1 or 2 products will have some defect. So we have to replace that. For that, the company is making every year a provision for warranty. Therefore, whether this provision for warranty will be allowed as deduction? Yes, it will be allowed as deduction. Next, non-compete fees you are paying. Remember, if you are receiving non-compete fees, that is the PGBP income. But if you are paying non-compete fees, then what is the treatment? Two options given by ICAI. You can claim that as a revenue expense, but if TDS is deducted under 194J at the rate of 10%. If you want to claim as a revenue expense, deduct TDS under 194J at the rate of 10%. Or you can claim 25% depreciation, making it as what? Making it as what? As a intangible asset. Both the options are available. Whatever you want to do, ICAI has solved the questions, assuming either of them, and written a note for the alternate answer. Okay. Next one. Whenever 31st Jan 2018 will be given in the question, always remember grandfathering clause is applicable. Whenever 31st Jan 2018 is given, grandfathering clause will be applicable, and accordingly you have to compute your cost of acquisition. For that, you need the FMV on 31st Jan 2018. How will you find out the FMV on 31st Jan 2018? For listed share and unit, you will take the highest price on 31st Jan 2018, or on that day, if trade is not there, then 30th Jan, 29th Jan, 28th Jan, whichever day trading has happened. Second, for unlisted unit, take NAV, net asset value. For unlisted share, take indexation till 2017-18. That will become the FMV on 31st Jan 2018. Now, recently what ICAI has been doing, they are asking question on 112A. They are asking question on grandfathering, but they are not giving what? They are not giving FMV as on 31st Jan 2018. They are saying that associate has purchased equity shares, has sold equity shares, STT has been paid on purchase and sale both. It means it is definitely what? It is definitely 112A case. Now, how will you find out FMV as on 31st Jan if they are not giving? You have to make an assumption. Either take FVC as your FMV as on 31st Jan 2018, or you can take cost of acquisition as your FMV as on 31st Jan 2018. I hope it is clear to all of you. Next one. You are receiving some dividend from domestic company. Do not gross up. Do not gross up. ICAI has stopped grossing up dividend received from domestic company. Unless and until it is very clearly written in the question that it is net of TDS, do not gross up. Even though the word received is written, do not gross up in total income question, please. So what should I do, sir? Reduce from PGBP, show under IFRS without grossing up. Yes, if it is written very clearly in the question that the dividend received from domestic company is net of TDS, then gross up with 10%. 10% TDS is applicable. Next, donation to political party electoral trust as to PGBP. In PGBP, it is not allowed. In chapter 6, it is allowed under normal regime if you pay by other than cash. If you pay by cash, then it is not allowed. But in new regime, it is not allowed. In 115, BAA, BAB, BAC, BAD, BAE, ATG, ATGGA, GGB, GGC, all these things are not allowed under the new regime. I hope it is clear to all of you. Next, an 100% holding company selling something to 100% subsidiary company, it is exempt if the recipient is an Indian company. If the receiver is an Indian company, it is exempt. Otherwise, it is taxable. If the receiver is a foreign company, then it is taxable under capital gains. So if the recipient is an Indian company, it will be exempt under 47. If the recipient is a foreign company, it will be taxable. Next, LTCG, STCG on equity shares, equity oriented fund, or you can say that units of ULIP, or you can say business trust on which STT is paid. But it will be taxed under 112A if it is long term with 12.5% tax, 1.25 lakhs exemption, and in 111 it will be taxed at 20% tax. Next, you are paying some salary to technician for installation of machinery. First of all, add to PGBP. It is not a revenue expense. It will be added to the machinery. You add to the machinery, claim normal depreciation, claim also additional depreciation if you are a power generator or if you are a manufacturer. Further, if you have not deducted TDS on this machinery, it's okay. For capitalization, TDS is not required. For claiming revenue expense, TDS deduction is mandatory. But for capitalization, TDS deduction is not mandatory. You can capitalize the salary even without deduction of TDS. I hope it is clear. It's a very important point. Next one is a very routine adjustment. A lot of time they have asked, you have sold goods of 22 lakhs. Okay, out of that 12 lakhs has become bad debt, so you have written off. Now, how much is receivable in the balance sheet? 10 lakhs. Now, you have received 11 lakh. And you have credited entire 11 lakh to P&L. No, you cannot do that. 10 lakh you have already included in 22 lakhs, correct or not? Therefore, what is the excess you are receiving? How much you are supposed to receive? 10 lakhs. How much you are receiving? 11 lakh. Therefore, only 1 lakh is taxable. Therefore, reduce 10 lakh from P&L account because that 10 lakh is already included in the sales. Go and think. Okay, I have told you about this lot of times. Next one is a very, very important and famous adjustment. And the next adjustment is also available in the new regime and old regime both. You are distributing dividend. You are a domestic company. You are distributing dividend 1 month prior to due date of filing of return. So you are eligible to claim deduction under ATM. How much? Dividend received compared with dividend paid 1 month prior to due date of filing of return, whichever is lower. So the dividend received is 10 lakh, for example, and the dividend paid 1 month prior to due date of filing of return is 8 lakh. Therefore, you will be eligible for claiming deduction of 8 lakh rupees. Now here there is an important catch. First important, it is available in 115 BAA, BAB also, new regime also. Second, very important. Suppose the dividend received is 6 lakhs. And there is an expense on dividend which is in the form of interest. One expense is allowed from dividend, that is interest expense up to 20% of dividend, correct? So now your net dividend is 5 lakh rupees. Okay. but dividend paid is 5.5 lakhs. So how much you will claim as a deduction? You will compare 5.5 lakhs with gross dividend or net dividend. Always compare with net dividend. That is more logical. Because your deduction under chapter 6 cannot be more than your income. How much is your income in total income? Only 5 lakhs. You cannot claim deduction of 5.5 lakhs from 5 lakhs. Therefore, you will restrict you will compare the dividend paid with the net dividend. Okay, try to do that. ICI is comparing this with net dividend also, and alternatively, they are saying that you can compare with gross dividend also. Whatever you want to write, you can write. It is your choice. But according to me, you can compare the dividend paid with the net dividend. I hope it is clear to all of you. Next one. You are converting your outstanding interest into a new loan. Conversion of outstanding interest into a new loan does not amount to actual payment. Therefore, it is not allowed as per 43B. But when this loan will be repaid, at that time, it will be allowed as deduction. Next one, conversion of outstanding interest into equity shares. So if you are converting your outstanding interest into an equity shares, that is allowed as a deduction as per the recent judgment of Telangana High Court. You can go and check in the recent RTP. I have discussed in the 26 paper compilation also. Next one, income tax including surcharge and cess disallowed. Next one, provision for payment of gratuity disallowed, but when you pay, it is allowed. Provision is disallowed, payment is allowed. Next one, expense on foreign travel of directors for opening a new branch for existing business. If it is for existing business, then it is allowed. But if it is for new business, then it is not allowed. Check point number 100. If it is for new business, then it is not allowed. Not allowed, not allowed, not allowed. New business not allowed. Existing business, foreign travel director allowed. I hope it is clear to all of you. Existing business, foreign travel director allowed, new business not allowed. Next is expenses on corporate social responsibility. If you incur any expense on CSR, then that is disallowed as per explanation 2 to section 37(1). Next is employer is contributing towards approved pension fund. If employer contributes towards approved pension fund for employee, then 14% of the basic salary plus DA in terms will be allowed. And if it is in excess of 14% of basic salary plus DA in terms, the excess will be disallowed under PGBP. Okay. Next one, there is a subsidiary and I am giving a contribution. I am a parent company. There is a subsidiary and the parent is giving some contribution to the subsidiary for the purpose of school to be constructed for the employees of the subsidiary. So the parent is giving some contribution to the subsidiary so that the subsidiary can make school in that the employees' children will study. So that will be allowed as deduction under section 37(1). Next, electricity charges is allowed on accrual basis. Electricity charges is not covered in 43B. Therefore, it is not allowed on payment basis. Next. There is some loss due to hedging contract and the hedging contract is done against foreign currency risk for purchase of raw material. You are importing some raw material and you have hedged your raw material for foreign currency payment. Against that, there is some loss. So this is a loss on raw material. Therefore, it will be considered as a revenue loss. It will be allowed as a deduction. Next one is a very famous adjustment which has come again and again in the examination, that there is a loss or profit again due to hedging of foreign currency on payment for imported machinery. Now listen carefully. I am importing a fixed asset on which there is a loss. While importing the machinery, I imported the machinery. After that, while making the payment in foreign currency, in dollars, in pounds, there is a loss or there is a profit. What should I do with that profit and loss? If it is for, again I am saying, if it is for what? If it is for raw material, then it will be considered as what? It will be considered as a revenue loss. But if it is for fixed asset, then add to PGBP first and then add to asset and claim normal depreciation and claim additional depreciation. So the loss will be added to PGBP, the profit will be reduced from PGBP first, and then the loss will be added to the asset, the profit will be reduced from the asset and claim normal and additional depreciation if applicable, otherwise not. Next, if you receive any non-compete fees, then it will be considered as a PGBP income. Next, you are planning to transfer a capital asset, but unfortunately you are not able to transfer the capital asset, but you have taken some advance and that advance is forfeited by you. So if an advance is forfeited by you, what is the treatment of that advance forfeited in case of potential transfer of a capital asset? You have to check the date of forfeiture. If it is forfeited before 1st April 2014, then it will be reduced from the cost of acquisition when you will sell the asset. But if it is forfeited on or after 1st April 2014, then it will be considered as income from other source. I hope it is clear to all of you. So the date of forfeiture is very important in this case. Next one, if you are selling some unlisted shares, and if it is a long-term capital gains, then it is subject to 12.5% tax. Next one, if there is some overvaluation of opening stock. If opening stock is overvalued, means you are claiming more expense, therefore add back. If opening stock is undervalued, it means you are claiming less expense. If you are claiming less expense, therefore reduce the profit. Okay. Similarly, if the closing stock is overvalued, it means you are showing more income, therefore reduce. If closing stock is undervalued, similarly, vice versa, you have to add back. Okay. Now, last year, the company mistakenly has included interest in the opening and the closing stock, but in the current year, the company has rectified the mistake. So in the last year, whatever mistake was done by the company, that is rectified in the current year, so everything is correct. So nothing should be done, no effect in PGBP, because whatever mistake was done by the company last year, they have suo motu rectified in the current year, so there is no need to give any effect in PGBP. Next one, there is some cash loss by fire or cash loss by theft, etc. In that case, that will be considered as a revenue loss. It will be allowed as a deduction in the current year, okay, under PGBP. Next one, if TDS is not deducted or paid by the assessee, but the payee has paid the tax, the payee has included that in the income, and the payee has filed the return. Then do you remember, in such cases, if the payer has not deducted the TDS and not paid the TDS, but the payee has done these three things, then it is deemed that the payer himself has deducted and paid the TDS, and the payer cannot be called an assessee in default. Do you remember that or not? In that case also, in the current year, 30% or 100% expenditure will be disallowed in the current year, but in the next year, the payer can claim the deduction. 30% for resident, 100% for non-resident will be disallowed in the current year, but in the next year, the payer can claim the deduction. Next one, if there is a closely held company in which you are holding 10% or more voting power, whenever closely held company will come, and if you are holding 10% or more voting power, if that closely held company is giving you loan, then that is deemed dividend in your hands. But the deemed dividend cannot be more than what? It cannot be more than accumulated profits. It will be restricted to what? It will be restricted to the accumulated profits. Next one. If you purchase a motor vehicle, generally if you purchase a motor vehicle is subject to 15% depreciation, and if you are in the business of running them on hire, then 30%. Okay. But if you purchase and put to use the motor vehicle between 23rd August 2019 to 31st March 2020, then it is extra 50%. Extra 15% means if the normal rate is 15%, then you will get 30%. If the normal rate is 30%, then you can also get 45%. But 45% is not possible if you are following new regime under 115 BAA, BAB, BSc, BAD, BAE, because in all this new regime, the maximum depreciation that is allowed is only 40%. You cannot get more than 40% depreciation in the new regime. Next one, you are incurring some expenses to bring water to the factory. So this is a normal business expense. You can claim that as a deduction under PGBP. Next one, you have incurred an expenditure, but you don't have the invoice, but indirect evidence is available with you, like the payment details you have, online payment receipt you have, you also have goods invoice report, then you can claim the deduction based on indirect evidence also. There is no need to have a proper invoice. Next one, expenses incurred on ISO 9001 certificate, it is considered as a revenue expense. You can claim that as a revenue expenditure. Next one, you are making a commission payment to a foreign agent. What is the foreign agent doing to you? He is providing you services in foreign country. He is not providing you services in India. Therefore, the TDS question does not arise. In that case, TDS is not required. Therefore, because TDS is not required, the expenditure will be fully allowed even though you have not deducted the TDS. Because the activity of the foreign agent is restricted to providing you services outside India. The foreign agent is not coming to India and providing you services. He is procuring order outside India and he is providing services outside India. Therefore, his income is not deemed to accrue or rise in India. Therefore, because his income is not accrued and rise in India, there is no need to deduct TDS. I have told you earlier also, in case of non-resident, you should deduct TDS only if the income of the non-resident is taxable in India. In this case, it is not taxable. It's a very famous example. A lot of time it has come in the examination. It has come in the question of paper of 26 paper compilation also a lot of time. Therefore, in this case, even if you have not deducted the TDS, the expenditure will not be disallowed. I hope it is clear to all of you. Payment of retirement benefit in cash. Yes, for cash, for retirement benefit, you can make the payment up to 50,000 in cash. Generally, you cannot make payment of more than 10,000 in cash. But for retirement benefit, the government is allowed under Rule 6DD to make the payment up to 50,000 in cash. Next, which I have already told you, dividend received from for domestic company net of TDS. If such words are written net of TDS, then gross up. Then gross up. Reduce from PGBP, show under IFOs, gross up with 10%. Okay. For foreign company, dividend never gross up. If you are receiving dividend from foreign company, never ever gross up. Next, you are earning some STCG from depreciable assets and you are following 115 BAB. If you are following 115 BAB, you are earning STCG from depreciable asset, from block of asset, 15% tax, 10% surcharge, 4% cess. If you are earning STCG from non-depreciable assets under 115 BAB, 22% tax, 10% surcharge, 4% cess. Next, you are paying some amount for inauguration of new branch, allowed as an expense. Compensatory penalty allowed. What is compensatory penalty? I am not completing your project on time, so I am paying you some compensation. That is compensatory penalty. I am not completing your batch on time. I am paying some compensation. That is compensatory penalty. Next one, penal penalty. Penalty are not allowed. That is for breaking a law. Any penalty paid for breaking a law will not be allowed. Next, VRS, voluntary retirement scheme, allowed in under section 35 DDA, but in 5 installment. It is not allowed in 1 installment. You have to take in 5 installment. Next one, very important point. You are making some payment for rural development under 35 CCA. Always remember, if you make payment for rural development under 35 CCA, that is allowed under normal regime also, and in alternative regime also it is allowed. It is allowed in both the regimes. Be careful. Next one. GST and income tax penalty disallowed. Both of them are penal in nature. Income tax interest disallowed, not allowed. GST interest allowed. Be careful. Next, payment for notified skill development. This is allowed as deduction under 35 CCD only in old regime, not allowed in new regime. In 115 BAA, BAB, it is not allowed. First of all, payment for skill development not allowed in 115 BAA, BAB. Secondly, it is allowed only to companies. It is not allowed to other than companies. Thirdly, it is land and building is not covered. For building, you can claim depreciation under section 32. Land and building are not covered in this section. For all other expenses will be allowed 100%. But for building, you can claim what deduction under section 32. Next, loss on destruction of plant and machinery. You cannot do anything on this. Loss on destruction of plant and machinery is your capital loss. Add to PGBP loss. And whatever scrap is received, you have to reduce from the PGBP income. And you have to make adjustment in the block of asset. If block of asset data is given, generally block of asset data is not given in the examination. So the treatment is very simple. Loss on destruction of machinery, add back. Scrap receive, reduce. Just ignore it. Rest of the thing, ignore. Don't do any adjustment in the block of asset. Block of asset information is not given in the question. Next, expense on dividend. No dividend, no expense is allowed from dividend income. Only one expense is allowed from dividend income. That too for residents. For non-residents, even that is not allowed. No expense is allowed from dividend. Only one expense is allowed for resident. That is 20% interest of gross dividend. That too it is allowed only for resident. For non-resident, even that is not allowed. For non-resident, the dividends are directly taxable at 20% under 115A. Next one, if TDS not deducted or paid in last year, but deducted and paid in the current year. So in the last year, you have made a mistake of not deducting the TDS, not paying the TDS. But in the current year, you have deducted and paid. So in the current year, you will get the deduction 30% if it is a resident and 100% if it is a non-resident. I hope it is clear to all of you. Similarly, next adjustment is very important. Last year, you have purchased new plant and machinery. You have used that machinery for less than 180 days. You are a manufacturer and power generator. So last year, you would have got 10% additional depreciation. What about the balance 10%? You can claim in the current year. Balance 10% you can claim in the current year. But here also there is a catch. In the current year, if you are following 115 BAA, then that balance 10% depreciation, additional depreciation cannot be allowed to you because in 115 BAA, additional depreciation is not allowed. I hope it is clear to all of you. Next one, expense on issue of convertible debentures, bonds, etc. allowed. If you incur some expenses on convertible debentures, bonds, loans, allowed, it's a revenue expense. But if you incur some expenses on issue of what? Shares, right shares, even if SEBI is not clearing, even if it is a SEBI's mistake, but it is a capital expenditure, it will not be allowed as deduction. Expenses on issue of bonus shares allowed. Expenses on increasing the authorized capital, not allowed. It is a capital expenditure. I have explained you all these things in class. Next one, you are a pharma company or you are making some payment. You are giving some freebie to medical practitioners, not allowed. It is disallowed under PGBP. Pharma company giving freebies to medical practitioners, disallowed. Donation to Swachh Bharat, not allowed in PGBP. You can claim under chapter 6A. In PGBP it is not allowed. You can claim under chapter 6A, but in chapter 6A also, in new regime it is not allowed. 115 BAA, BAB it is not allowed. Donation to Clean Ganga, not allowed in PGBP. You can claim under chapter 6A, but Clean Ganga is allowed to chapter 6A only for residents. Only for residents it is allowed. It is not allowed for non-residents. Plus, this is also not allowed under new regime. It is only allowed under old regime. That too under chapter 6A, not under PGBP. Now the next two adjustments are very important. I am a trader in security and I am paying brokerage. First of all, if you are not a trader in security, what will happen? Then this expenditure of brokerage will not be allowed. If you are not a trader in commodity, then this expenditure of brokerage is not allowed only. First of all, if you are not a trader in security, if you are not a trader in commodity, then this expenditure of brokerage will not be allowed. Now let's talk about if you are a trader in security. If you are a trader in security, then brokerage can be allowed as a deduction. Now, if you have not deducted TDS, it's okay because for commission or brokerage on security, TDS under 194H is not applicable. If TDS under 194H is not applicable, why will I deduct TDS? Therefore, without deduction also, I should get the deduction. Correct? Without deduction of TDS also, I should get the PGBP deduction. Therefore, in this case, brokerage on securities will be allowed as deduction without deduction of TDS also. Next one. If I am a trader in commodity and TDS is not deducted, now my expenditure will be disallowed because as per 194H, TDS is required to be deducted on commodity. On commodity, TDS is mandatory. Now in this case, if you don't deduct TDS, then 30% expenditure will be disallowed. This logic is applicable if you are a trader. If you are not trader, then close your eyes and disallow the entire amount. I hope it is clear to all of you. If you are a trader, then we are asking TDS is deducted or not. First of all, you should ask yourself a question. Are you a trader? No. Then disallow both. Then you should ask a question. Are you a trader? Answer is coming yes. Then for brokerage on security, TDS is deducted, not deducted, still allowed. Brokerage on the commodity, TDS is deducted, not deducted, 30% is allowed, because on commodity TDS is mandatory. Next one, there is some feasibility study you have done, but the project was abandoned. It's okay, you will be allowed a deduction, no issue. Then you are receiving some industrial tariff commission from the government. So if you receive any concession, tariff, if you receive any subsidy, grant, reimbursement, waiver, etc. from central government, state government, any body, agency, authority, then that is taxable as income under section 224(18). I hope it is clear to all of you. Then check in the question, if any business is coming under 35AD. If any of the 14 businesses are coming under 35AD, you need to be taking that business separate from your normal business, because 3580 business and normal business cannot merge with each other. Their losses cannot set off with each other. Be careful. Therefore, if any 3580 business is there, take 100% deduction of all capital expenditure, except 3 expenditure: land, goodwill, financial instrument. Plus, check if the payment is more than 10,000 rupees to a person in a day, it should be made by 4 modes, otherwise expenditure will not be allowed. Plus, one more thing you should check, which is not written here also, that it is not allowed under new regime. In new regime, it is not allowed. It is not allowed under 115, BAA, BAB, BAC, BAD, BAE. It is not allowed under these sections. Next, the GST department has refunded GST, but you have not paid back to customer. So, to the extent it is not paid back to the customer, add to the profit and pay tax. The department has refunded 10 lakh rupees. You have given back to customer 6 lakh rupees. 4 lakh you have not given back, 4 lakh deemed income. Next one, very important. You are a closely held company. If you are a closely held company and you have incurred losses in the last year, then 51% of the shareholders on the last day of the last year and the last day of the current year should be same. If the 51% of the shareholders are not same, then the losses cannot be carried forward under the income tax law. Check please. In that also there are some exceptions. You need to check that exceptions very carefully in section 79. Next one. You are making some excess payment to relative and it is paid in cash. So you are making 2 mistakes. You are making a mistake under 48(2) also. You are making a mistake under 48(3) also. Both the mistakes are done by you. Therefore, what should I do? Disallow both. First 48(2), then 48(3). For example, you are making 1 lakh rupees payment to your related party in cash, but the market value is only 40,000. So first disallowed under 48(2). Market value is 40,000. You are making 1 lakh cash. 60,000 will be disallowed under 48(2). Then remaining 40,000 will be disallowed under 48(3). I hope it is clear to all of you. You are doing some repair to plant and machinery for replacement of worn out parts of the machinery. So if you are doing some repairs to plant and machinery for replacing the worn out part of the machinery, so if the capacity of the machinery is not increasing, you can claim that as a revenue expense under the income tax law, under section 31. Now, your employee was on a business trip and he died. So out of gratitude, you paid some money to his family, so it is allowed. So if your employee was on a business trip, he was not on a personal trip, he was on a business trip, and out of gratitude, if you are paying something to him, then it should be allowed as deduction. Next, capital expenditure of family planning. Family planning expenses, first of all, are only allowed to company, and for company also, if it is a capital expenditure, it is allowed only 1/5 in 5 years. Revenue expense, you can claim fully. Further, if there is a loss due to capital expenditure, it is treated like unabsorbed depreciation. I hope it is clear to all of you. Next, there is a retrenchment compensation. You are removing your employees and you are paying them retrenchment compensation. Whether that will be allowed as deduction, that depends. If the unit is closed, then it is allowed. If the company is entirely closed, then it is not allowed. If one of the part of the company is closed and you are retrenching employees, it is allowed. If the entire company is closed and you are retrenching employee, then it will not be allowed as deduction. Next one, you have taken some working capital loan from a bank, and the bank has waived that loan, so that will be deemed income under section 41(1). It is a remission and cessation of a trading liability. If the bank has given you a working capital loan and that is waived by the bank, that is deemed income. That is a benefit in your hand. It will be subject to what? It will be subject to tax under 41(1). What about the waiver of interest by bank? The waiver of interest will not be deemed income because the interest was not allowed as a deduction because it was not paid and it was outstanding, and outstanding interests are not allowed under income tax law. It is allowed on payment basis under 43(b). Therefore, waiver of interest should not be charged as income in your hands. I hope it is clear to all of you. Next one, mark to market loss. Is mark to market loss allowed? Yes, it is allowed under section 36 subsection 1 clause 18, but it should be as per ICDS. Only then it is allowed. If it is not as per ICDS, then it is disallowed under section 40(a)(13). So the ICDS says that the mark to market loss should be from a settled derivative. If it is from a settled derivative, it is allowed. If it is from an unsettled derivative, then it is not allowed. It will be disallowed under the income tax law. I hope it is clear to all of you. Next, you are giving some benefit and perquisite in business to someone. You are very happy with your distributor or your customer. You are giving some benefit and perquisite to your customer or distributor or seller or supplier, anyone. Then in that case, you should deduct TDS under 194R. If you deduct TDS under 194R at the rate of 10%, then only the expenditure will be disallowed if it is the payment is, if the perquisite or benefit is more than 20,000 rupees. But if you don't deduct the TDS under 194R, then 30% of the expenditure will be disallowed under the income tax law. Next one, you are receiving some interest on margin money deposited with the bank for business purpose. So you are depositing in the money in the bank for what purpose? Business purpose, not for your investment purpose. From that you are a deposit for that purpose you are depositing. Again I am saying you are depositing the money in the bank for business purpose, not for personal purpose. From that you are earning some margin money. From that you are earning some interest. That will be considered as a PGBP income, not as an IFRS income. I hope it is clear to all of you. Next, you have taken a loan from bank and you have not paid the interest till the due date of filing of return. It will be disallowed under 43B. If you take a loan from a bank or financial institution, see which loans are covered in 43B. If a loan is taken from a scheduled bank or a public financial institution or a state financial corporation or a notified NBFC or a cooperative bank, if you are taking loan from these banks, these institutions, then you have to pay the interest till the due date of filing of return. If you take a loan from a foreign bank, or if you take a loan from your employer, or if you take a loan from your friends, then the interest can be allowed on accrual basis also. Next one, if you are a construction company and if there is a retention money which you are receiving today, then retention money will be taxable when you receive as per the percentage of completion method. So as per the percentage of completion method, retention money will be taxable today only. I hope it is clear to all of you. Let's go ahead with the next point. The next point is, I am a company, I have invested in a real estate investment trust in a business trust, and the business trust has earned some short-term capital gains on property. So if the business trust is earning some short-term capital gains on property, what is the impact of that short-term capital gains on property in my hand? It is exempt in the hands of investor and the business trust will pay tax at MMR. Be very careful. It is exempt in the hands of investor. In the hands of investor, I am the investor, it is exempt in my hands and the business trust will pay tax at MMR. Okay, next one. If the business trust is earning some rental income from the property, be very careful. This is very, very critical. If the business trust is earning some rental income in the, then rental income is exempt in the hands of business trust. It is taxable in the hands of investor. Now the question is, it is taxable in the hands of investor under which head? It will be taxable under PGBP because it is the business of the business trust to invest in real estate. Therefore, it will be taxable under PGBP, not HP. But after Finance Act 2024, you need to be very careful. This rental will be taxable in the hands of business, in the hands of investor under house property if it is a residential property. So if it is a residential property, then it is house property. If it is a commercial property, then it is PGBP. So be very careful. If the business trust is investing in properties, they are earning some rental, it is exempt in the hands of business trust, in the hands of investor, depends upon which property. If it is a commercial property, then PGBP. If it is a residential property, because let out of a residential property is deemed to be house property always as per income tax law, as per Finance Act 2024 amendment. Next one, you are making a payment to a road transporter who do not own more than 10 trucks at any time during the previous year. He is also giving a PAN, he is also giving a declaration. If he is doing all these things, then you do not have to deduct his TDS under 194C. It is exempt under 194C to deduct TDS. Okay. Next one, if you are receiving some compensation from central government or state government for compulsory acquisition in pursuance of an interim order. So if you receive anything in pursuance of an interim order, then that is taxable when the final order will be passed. It is not taxable today. Today reduce from PGBP and write a note that this will be taxable when the final order will be passed. It will not be taxable today. Next one, I have already told you, so ignore that. Point number 100. Okay. 101. The company received purchase bill of 31st March, which they omitted to record. So they have purchased some goods of 10-20 lakh rupees, which they failed to record. So now record, what's it? There is no great deal in that. How to record? Reduce from PGBP. That's it. You have to record it now. That's it. Next one, you are making some payment of commission to the recovery agent. It is allowed. If you make any payment of commission to recovery agent, it is allowed if TDS is deducted. If TDS is not deducted, then it is not allowed. Next one is a very important judgment of Supreme Court of Sassoon Chemicals. What has happened in this case? We all know that the bonus and commission to employees are allowed on payment basis under 43B. If you make the payment, then only bonus and commission will be allowed. Otherwise, bonus and commission will not be allowed under the income tax law. Now, the question over here is, there was some dispute which was going on between the company and the employees. So, because the dispute was going on in the court, so company did what? The company transferred the money of bonus to a separate account in a trust. And when the dispute got settled, the company paid the money. So, everything was settled before the due date of filing of return. The assessing officer said that, no, I will not allow you the deduction because you are not directly paying to the employee. First, you are paying to a trust. Then the trust is paying to the employee. Therefore, the question went to the Supreme Court and the Supreme Court said that it should be allowed as a deduction. There is nothing wrong in this. I hope it is clear to all of you. Next one is a very, very, very important point, which is on MSME. MSME payments are covered under 43B. First of all, the limits of MSME is changed. Now, enterprise will be called as micro enterprise if the investment in plant and machinery is up to 2.45 crore and the turnover is up to 10 crore. And it will be called as small enterprise if the investment is up to 25 crore and the turnover is up to 100 crore. So the limits have changed. You need to check that limits are changed. Firstly, this. Secondly, only micro and small enterprise payments are covered in 43B. Medium enterprise payments are not covered in 43B. Now, by when we should make a payment? Let's see the time limit under the MSME Act. If there is an agreement between both the party, buyer and seller, then you should make the payment within 45 days or agreed period, whichever is earlier. If the agreed period is 40 days, then make the payment in 40 days. If the agreed period is 70 days, then make the payment in 45 days maximum. That is the time limit given under MSME. Second, if there is no agreement, then make the payment within 15 days maximum. Now, if you make the payment as per MSME due date, then it will be allowed on accrual basis in the current year 25-26 only. But if you make the payment after the due date, then it will be allowed on payment basis. Now, fortunately, the payment can be in the same year also. If the payment can be in the same year, then it will be allowed in the same year. But if the payment is in April, then it will be allowed in the next year. It will not be allowed in the current year. Be very careful. Okay. Next one. You are a builder, you are building housing project, you have taken approval, you are building housing project for sale or rental, and you have taken approval before 1st June 2022. So if you are a builder, if you are doing housing project for sale or rental, and if your project is approved from 1st June 2016, 1st June 2016 to before 1st June 2022, then you are eligible for deduction under 80 IBA. But this 80 IBA will not be allowed under 115 BAA. In 115 BAA, BAB, etc. in new regime, this 80 IBA will not be allowed. In new regime, only 3 chapter 6 are allowed. That is 80 LA, 80 M and 80 JJAA. Only these 3 chapter 6 are allowed under new regime. Rest of the chapter 6s are not allowed under new regime. Be very careful. Okay. Now very important. In this also in 80 IBA, the deduction will be allowed if you yourself build. If you yourself build and sell, then it is allowed. If you give this on a work contract to somebody, then it is not allowed as a deduction. I hope it is clear to all of you. You cannot give this as a work contract to someone. You have to yourself build this particular project, then only it will be allowed. So in the question they will write, the SSC has earned 30 lakh rupees from building the project. Secondly, they will write the SSC has earned 10 lakh rupees from work contract. So the 30 lakh rupees building project will be allowed as deduction. 10 lakh rupees work contract will not be allowed as deduction. I hope it is clear to all of you. Next, you have received some application money from your shareholder. You have kept that money in the bank and against that you have earned some interest. This interest will be knocked off against the share issue expense. Don't take that as income from other source. Don't take that in income from other source. You have to knock that off against what? Against the share issue expense. Next, you are receiving some subsidy grant etc. from government for fixed asset. If you receive any subsidy grant etc. from government from fixed asset, reduce from the actual cost and claim depreciation. Next, you are purchasing some asset and the payment is made to a person in a day by other than 4 modes. So if you are purchasing any fixed asset and if you are making the payment to a person in a day other than 4 modes, then that much expenditure will not be considered to be part of actual cost. On that much expenditure, you cannot claim normal as well as additional depreciation. Both will be not allowed to you. Suppose you are purchasing an asset of 1 lakh rupees. Out of that 70 lakh is paid by account paycheck and 70,000 sorry, not 70 lakh. 1 lakh is the value of asset. 70,000 you have paid by account paycheck. 30,000 you have paid by cash. So 30,000 cannot form part of actual cost. On that 30,000 you cannot claim normal depreciation, additional depreciation only. Also your actual cost is only 70,000 rupees. Next one is a very very important adjustment because it is a recent amendment by Finance Act 2024. If you incur any expense to settle a proceeding in contravention to such law as notified by central government. So the government will notify some law. If you have contravened that law, so you to settle that law, you are paying some fee. That fee will not be allowed as deduction under income tax law. Now the question is, has the government notified any law? Yes, the government has notified 4 laws. One is SEBI, one is Securities Contract Regulation Act, third is Competition Act, and fourth is Depository Act. So in these 4 laws, if you violate certain things, and to settle that, if you make the payment to the government, then that settlement fee will not be allowed as deduction under the income tax law. I hope it is clear to all of you. Next one, income from transfer of carbon credit. If you are transferring a carbon credit, then that is taxable at 10% without deduction of any expense. If there is any expense on transfer of carbon credit, add back that. And the income will be taxable at 10% directly. Next, if you pay any regularization fee for violating a law, you are violated a law, you are making a payment for regularization fee. That is disallowed because that is an illegal expense. Next, instead of paying the tax to the government, you are giving what? You are giving bank guarantee. For example, GST department is there. Instead of paying the GST, you are giving bank guarantee to the GST department. Not allowed. Giving bank guarantee does not amount to actual payment. It is disallowed under the income tax law. I hope it is clear to all of you. Next one, expenses incurred for construction of tenement for workers. What is tenement? Tenement is a temporary house. There is a land which belongs to the state government. I told state government that please give me this land for few years. I want to construct a temporary houses for my workers. Once my work will be done, I will give you back the entire property. You take it back. So that is a revenue expense. The ownership does not lie with you. The ownership lies with the government only. It is not yours. It is government's. To claim depreciation, you need to be the owner of the asset. You are not the owner of the asset. You are only incurring the expenses for temporary purpose, for making tenement for your workers, for the purpose of business. That can be claimed as a revenue expense. Next, you are paying some upfront discount interest paid for 5 years debentures. So you have issued some debentures of 5 years. Now you have purchased some debentures of 5 years. Now you are paying some upfront discount of 5 lakh rupees. So that will be allowed as deduction. Do not amortize that over a period of 5 years. The reason is because the liability is crystallized today. You have to claim that entire amount as a deduction today itself. Next, some tax rate. What is the tax rate of foreign company? 35%. Surcharge 2% if the total income is up to more than 1 crore and up to 10 crore. Surcharge 5% if the total income is more than 10 crore and 4% cess. What is the tax rate of domestic company? For normal company, if the turnover is up to 400 crore in last to last year, in 23-24, if the turnover is up to 400 crore, 25%. If it is more than 400 crore, 30%. What about exact 400 crore? Exact 400 crore, then 25%. Be very careful. If it is more than 400 crore, then 30%. Surcharge 7% if total income is more than 1 crore. Surcharge 12% if total income is more than 10 crore. Now be very careful. In foreign company normal tax rate and domestic company normal tax rate, you also have to check the marginal relief. Marginal relief implication can be tested in the examination very intelligently by ICAI. If your income is near to 1 crore, if it is near to 10 crore, then marginal relief can be applicable. Even for individual HUFs also, you have to check marginal relief very carefully. Be very careful. Next one. In 115BAA, margin relief is not applicable for special rates. Margin relief is only applicable to normal rates, because in special rates, directly 10% surcharge is applicable. If direct 10% surcharge is applicable, the effective tax rate is going to be same only all the time. So margin relief concept will not apply here. Margin relief concept applies when the surcharge changes. That time margin relief comes. Therefore now, for domestic company under 115BAA, what happened? What is this? Wait. For domestic company under 115BAA, 22% normal tax, special income will be taxed at special rate like 111A, 112, 112L lottery, all these things will be taxed at special rate. Then 10% surcharge always, and 4% cess always, irrespective of income. Next, domestic company who is covered under 115BAB. Here there are multiple rates. If you are earning from manufacturing and electricity generation, 15%. Other incomes like house property, like you can say dividend income, 22% without deduction of any expenses, which I have told you earlier also, while municipal tax of house property was let out. That point I was explaining. Third, special incomes will be taxed at special rates. STCG on depreciable assets, I have told you earlier, under 115BAB it is 15%. STCG on other assets, I have told you earlier, it is 22%. Yes or no? Domestic transfer pricing adjustment, it is 30%. What is domestic transfer pricing? One entity is claiming 115BAB, another entity is not claiming 115BAB, it is paying tax at 30%. So what will I do? 115BAB entity will sell the goods at higher price. 500 rupees is the selling price, I will sell at 1500. Because that the purchaser will get deduction at 1500 and I will pay tax only at 15%. So therefore, for me, that extra amount which I am charging, that 1000 rupees extra I am charging. What is the market value? 500. I am selling at how much? 1500. That extra 1000 will be subject to transfer pricing under 92BA at the rate of 30%. Then 10% surcharge, 4% cess always applicable. Last but not least, if it is written in the total income quotient, compute total income and tax liability, then compute total income and tax and leave it. But if they ask compute total income and tax payable, then always remember tax payable is after deducting TDS, TCS and advance tax. After deducting, you need to check hidden adjustment also in the quotient. Sometimes it is hidden that some TDS is applicable, somewhere some TCS is applicable, associates purchase some car, etc. Anything can happen because of which TDS, TCS or advance tax can come in the examination. Okay. So this is what 108 adjustments is all about. 118, sorry. Last year it was 108. This year I have improved, made an improvisation by increasing further 10 adjustments to the extent it is possible from my side. If you watch this video again and again, it would be great. Once again, I would like to say 2-3 things. Share this again and again with your friends, maximum friends across South India, mainly my Guntur students, dearest Guntur students. Please make sure that you share that in all the hostels in Guntur and all other places also to the extent it is possible from your side. Secondly, the PDF of this file is there in the Telegram channel and it is also there on our website aarishkhan.com, free resources. You can go there and check. You will get all the free PDFs over there only. Whatever PDFs are there, I have uploaded on my Telegram channel as well as on my website. Thirdly, whichever point you feel it is important, just make sure that go down below and write down the timestamp so that when you revise for the second time, you don't have to watch the video once again completely. Only click on that timestamp and that adjustment will be clicked to you very fast. Okay, so that you don't have to search that again and again. I hope it is clear to all of you. God bless you all. See you soon with another great video. Till then, take care all of you. Bye.